Good afternoon, everyone. Welcome to this Spotlight on Transformation and Disruption in Financial Services webinar, organised by Ditto, the marketing, business development and communications company for the financial services sector. My name is Michael Imeson, and I'm the Senior Content Editor at Financial Times Live, the FT's conference division. I'm also a chartered member of the Chartered Institute for Securities and Investment, the CISI, and the Deputy Chairman of the CISI's Fintech Professional Forum. Joining me here today for this discussion at Ditto's London offices are executives from four companies. First, we have Alex Cardona, who's the co-founder of Codat, which is a software development company that has developed an API, an application program interface, for banks that provide services to SMEs. And the API links the bank systems with its SME customers' banking and accounting systems. Then we have Garrett Cassidy, CEO and co-founder of Trezeo. The company, which is authorised by the FCA, provides an income smoothing service for self-employed people, which turns their irregular income into regular payments. Then we have Gareth Mee, CEO and co-founder of DisruptCX, which is a provider of technology and consulting services to help financial firms improve the customer experience. CX, customer experience, which explains the letters CX in the company's name. And finally, we have John Byrne, CEO and co-founder of Corlytics, which is a regtech firm that's a leading provider of information on regulatory risk to financial firms to help them comply with all their regulatory requirements. Now, I'd just like to say a few words myself about the topic to get the thing going. The financial sector has been disrupted and transformed in a way that we haven't seen before. There are many drivers. There's changing customer needs, more regulation, a growing global economy, more people than ever being able to access banking and other financial services, and of course, technological innovation. And it's this technology driver that this webinar is about. We're going to focus on retail banking, small business banking, and we're going to look at consumer-led innovation in this area that's drifting into other areas of financial services. Now, the articles I write for the Banker magazine and the FT and others, and the conferences I organise, cover digitalisation quite a bit. I'll just give you one example. In early December, the FT is holding its 5th annual banking summit, and I'm one of the main organisers. I wrote the agenda, invited and briefed the speakers, and the chairman and the moderators. And there's a panel session entitled Digital Decision Making, Doing It Quickly, Getting It Right, which pretty much sums up what we're going to be covering in today's webinar, which is that banking leaders are living through a period of unprecedented technological change, which is transforming the way they think about and go about their business. Senior management teams are having to make strategic decisions, often with little time to pause and reflect. Mobile money, blockchain, cloud computing, to rattle off all sorts of developments that are taking place. And it's very difficult for incumbent banks to know how to compete, or whether indeed they need to compete. Maybe they can partner with fintechs, not just the startups, but the big techs as well. These are all matters of great importance that have got to be acted on quickly and intelligently. So I hope that gives you a flavour of what we're going to talk about in this webinar. The format of the discussion is quite simple. First, I'll ask each of our speakers to introduce themselves and tell us about the role that they and their companies play in the development of financial services technology. Then I'll ask them some more questions, and then listeners, you'll be able to ask some questions via the webinar site, so please do send some in, and I'll try to get them answered near the end. There's a section on the site which explains how to send in questions, and then finally we'll wrap up with some concluding remarks. So let's start with Alex Cardona from Codat. Can you tell us, Alex, about yourself and what Codat is, and what you're doing to transform the banking sector, especially in relation to SME banking?
Sure, thanks very much. I and the team who set up Codat a couple of years ago, all are very much children of the London fintech scene, having worked at places like Market Invoice, RateSetter, Crowdcube. And Codat is very much born out of a business problem that we experienced while working in those places, which is essentially the access to good information and data on small businesses in the UK. And so what Codat does is essentially makes the software that small businesses use interoperable with the systems that the banks themselves use and lenders use. Really, at the core of it, it's about making consumer experiences worthy of the small banking experience.
Okay, thank you, Alex. Garrett Cassidy at Trezeo, tell us what your company does and your fintech story.
Yeah, so I suppose at Trezeo, we're very focused on providing financial services to self-employed. Comes from a lot of work our own history, but also a lot of work we've done with kind of self-employed workers, kind of individuals in self-employment or gig economy, huge numbers, more working that way, and which technology is a big part of driving with platformification, etc. So, and they're a traditionally very underserved sector of the market with different needs to traditional employees. So our core product, as you mentioned earlier, addresses kind of a key challenge around variable and uncertain income, and it's a difficulty in saving for these people by giving kind of regular paycheck, access to money in emergencies, and automated savings. So it's kind of financial peace of mind, but importantly, it also lays a foundation to access financial products that employees would take for granted in this kind of very growing part of how people work.
Okay, thank you. And Gareth Mee of DisruptCX.
Thank you, Michael. Good afternoon. As Michael's already intimated, DisruptCX is a customer experience management technology consultancy and agnostic technology provider. Very simply, we provide disruptive technologies to our customers which enable them to significantly reduce the cost of their customer service or operation, and probably more importantly and relevant to this conversation, significantly improve customer experience across all customer channels.
Okay, thank you. And John Byrne, Corlytics. Tell us about Corlytics.
Okay, well, the thing about Corlytics is we're in the RegTech space. We really do two things. We really we help transform the operations of financial services companies in the weight of so much regulation. So at Corlytics, really we do two things. We make regulations relevant, or we serve it up to the right part of an organization. And secondly, we weight that regulation. So we look at regulation as any other risk that has to be managed, and we help banks in that way, ultimately leading to providing better outcomes.
And can you just briefly tell us about RED, the Regulatory Event Data App?
I absolutely can. So we launched RED last week. We've had over 2,500 people sign up for the app, and this is a free app where every regulatory notice in the world that you select from can be brought not just to a PC or a terminal, but right to your mobile phone in an app.
Thank you, John. Thanks everyone for your introductory remarks. You're all working on some very interesting projects, but let's look at the broader picture now. The first key question, and I'd like Garrett Cassidy from Trezeo to answer this one first. What wider opportunities does technology offer the financial services sector? What other noteworthy projects, services or products other than your own stand out for you, ones that are truly transformational and disruptive?
I suppose coming from an angle from where we come from in terms of kind of financial inclusion and servicing, underserved sectors, I think technology has a key role to play in making it economic to service these sectors, where traditionally, the traditional industry, the cost to serve and the legacy infrastructure makes large sections of, either particular products or actually, in the case of self-employed, just very, expensive to serve and therefore not economic. Some of the examples of that, a few in that kind of B2C space, you've got the likes of Monese and Pocket, who enable people to get bank accounts who traditionally have huge difficulty on bank accounts for lots of reasons. People like Moneybox making investment much easier and much cheaper. And then in a slightly different way, people like Goodbox, who are making it easier for charities and other areas to actually digitize their payments with cash being eliminated. So that's just kind of a flavor, but it's really kind of helping access those areas of the market where the legacy makes it difficult for the traditional players to access.
Mm-hmm. So for you, it's things that promotes financial inclusion.
Yeah, and financial inclusion, and also financial inclusion in all its facets, whether it be just banking people, but it's also access to financial products which traditionally might have been reserved for much higher earners who had advisors, and who were making enough return and profit for the banks to invest that kind of level of cost into it, whereas obviously technology is making, like the consumer internet, where things are, the cost to serve is so much lower, it means that actually now using technology and financial services allows some of that to replicate, to actually bring those products to more people.
Mm-hmm. Gareth, for you, other than what your own company is doing, what are the broader opportunities?
I mean, obviously, technology is creating many new opportunities in the financial services sector. New business models will be created and driven by fintech. Interesting to hear what Garrett said there. Cost of entry, certainly a topic, or something that technology is enabling. More so, the ability for a consumer to interact with their bank or their insurance company, just as they would interact with their friends. They demand that, they want to do that.
Isn't there a danger of, you say interact with friends, isn't there a danger of the banker or the insurance company being a little bit too friendly, a little bit too informal with their customers?
Yes, but you could argue that, but I remember the days many years ago when I had a personal bank manager, and I wasn't a high net worth individual. That was a personalised service. So why can't we, through technology, be able to provide that kind of service again? We should be able to.
And if you are a high net worth individual, that bank manager today probably would still take you out for lunch.
No, it's interesting you should say that. And maybe going a little off-piste here, but I was talking to someone that works for me now that was involved in some of the very first natural language or conversational speech platforms. And a bank implemented a service, and the view was that service should be for low net worth people, right? Mm-hmm. And actually, after implementing the service, it was actually the high net worth, the one that drove the demand for that service, because they wanted a quick interaction, and they wanted to be able to get what they wanted through what channel they wanted at that point in time. So it's interesting how things work out. I think from a consumer's perspective, very much today, we're all used to interacting across multiple channels and getting something 24/7 and when we want it.
Yeah. Okay. John, broader opportunities of fintech?
Well, so obviously I'm wearing a RegTech hat, but if you just look at, the background where financial services come from 10 years ago, regulators are saying they want better outcomes. They want better outcomes in terms of banks taking less risk. They want better, and other financial services companies, they want better outcomes in terms of efficient markets, and they want better outcomes in terms of what financial services provides to consumers. While they're all very elegant goals, the reality is that for a lot of global multi-product players, they have about 50,000 legal documents, or about 5 million legal pages of text to consume every year. What we do in Corlytics, and we're seeing really a big movement against it now, is it's not just about having all of that information flat, but it's about doing something useful with it. And we have been one of the pioneers in driving AI to enable firms to, first of all, serve it up to where it's relevant, then digest it, and then start risk weighting it. Because just a couple of interesting things, if you look at the top 50 banks in the world and you look at their balance sheets, the number one financial risk with all these banks is actually legal and regulatory risk. It's no longer credit risk, it's no longer market risk. So really we're really the first mover to make all of the regulations more digestible to firms, but also to put in risk disciplines so that you can just look at regulation as any other class of risk, just like credit or market.
That's a good point. When I've written articles on financial crime, I often point out that banks have got more to fear from the regulator than they have from the criminal. Maybe the wrong thing to say, but you might lose 100 million through a criminal activity, but then the regulator could fine you $2 billion for non-compliance. Alex, broader opportunities afforded by fintech and banking.
Sure. So, I think a broad theme that we see particularly in the small business world is how the point of delivery for financial services is changing dramatically. At the core of it, actually a lot of these financial products, there isn't actually much innovation in the actual financial piece of it. It's on the tech side, and the tech doesn't change the simple fact that an overdraft looks like an overdraft, right? All that changes is the point at which the consumer ends up experiencing that, and the way in which they receive the information about that. You know, if we look inside a lot of large financial services, still, you know, it looks a lot like the 1980s, really, fundamentally. There's a lot of paper flying around, the guys who are really doing interesting, exciting things we're seeing are bringing that point of delivery where the consumer actually experiences it right up to them. So a couple of really sort of amazing examples that we love. Codat are actually Xero, the accounting software, which has made a real difference to the way in which a lot of small businesses run, simply by moving accounting software to the cloud. You can log on and get your access to your account on the you know, wherever you like, and that's what you know, small businesses need and are looking for. You know, Tide doing the same in small business banking. iZettle when it comes to taking the payments. The technological change is actually not so much about the financial side as it is really just about the hardcore tech side.
Mm-hmm. Interesting you say that. Some fintech people, their background would be financial services, some is technology. Do you have a background in financial services, or is your background purely technology?
So I for my sins, definitely on the financial services side. So yeah, I was always in bringing in investment in peer-to-peer lending, but it's very much a sort of tech-led world that I come from, and our primary solution that we have for anything is always tech-focused.
Yeah. Okay. Now I wanted to ask Garrett about Trezeo, because I had a look at your website, and I think it does say that you provide this income smoothing service. And I thought, you know, that's a very interesting thing. And I then read an article in FinExtra in July, which explains quite well how it works. Perhaps you could explain in your own words how this income smoothing service would work for a self-employed person.
Yeah, so I suppose that there's a couple of elements to it. The first one, and most importantly, is really understanding the customer's income, and we use open banking to do that, you know, to get started in terms of understanding if you're a cab driver or Uber driver, many of these have multiple sources of income. So understanding those sources of income, understanding the volatility and variability, and understanding the kind of baseline sustainable income that's within that. And then the objective of the whole service then is to actually enable people to get that kind of baseline income on a regular basis. And it does it in, you know, so then, and how we actually do that then has a number of components. So the customer gets a bank account, which
would it be a Trezeo bank account, or would it be with a well-known bank?
It's with a partner bank, yes. So Trezeo is authorised by the FCA as a lender and payment firm, but actually for holding customer funds, we're relying on a bank.
So would their funds be covered by the financial services compensation scheme?
They will shortly. So currently it's a payment account e-wallet. If somebody looks at our website today, but it is that we're about to change that. And what then happens is customers, this account acts effectively as their kind of buffer, or almost their own payroll account, and they get paid through it. And at times they earn more, it automatically effectively builds their rainy day fund for them. Times they earn less, it automatically dips into that. But when they're at the bottom of a kind of trough or cycle, taking holidays or whatever, you know, we also are in a position to top them up for credit, and we do that whole thing for a subscription service. We also, another problem for a lot of these customers is just emergencies. So they have problems. So they need access to their money in an emergency. Sometimes it might be their own money because they have a rainy day built up. Sometimes it might be credit. And finally, in order to help people start to save, so one example is tax. So one of the biggest mistakes of self-employed is paying themselves their full amount of money. So we have a very simple feature in the service where they can effectively say how much tax they need to deduct, and it'll store it separately for them. So they put it aside.
It sounds similar to what some utility companies, electricity companies, gas companies do. So you don't get hit every quarter with a massive bill.
Yeah, the level pay type. So exactly. It's exactly that, and it's got a big psychological piece in terms of a lot of these people are living week to week or month to month, and they're constantly, it's not necessarily about they're not earning enough, they're constantly worried about will they have enough next month to pay the bills. And that's a real psychological challenge, which then also acts as a barrier to kind of financial health and stability.
Right. And finally, before I move on to one of our other speakers, how would your customers pay for this service?
So they pay a subscription service. So currently, our early customers, that's £5 a week, which includes all of the services, including the credit. So it's completely transparent, no hidden fees, which is a real problem with some of the existing products.
Yep. Okay. Gareth from DisruptCX, tailored question for you. One of your solutions is a natural language solution, which I believe is a kind of voice recognition software to allow customers to speak to their bank's computer instead of a bank staff member. But voice recognition has been around for some time, so what's so different about what you're doing that hasn't already been done 10 years ago?
It's quite interesting, you're right, voice recognition has been around for a long time. Automated speech recognition has been around for 15 years plus. And I would remember working with some of the early adopters or early companies, vendors. I think in all reality, we've only just seen this with the consumer world. It's only really reached a quality level that is now acceptable by consumers, by customers, so that organisations are able to implement. And we've seen the explosion of Alexa and personal assistants in the home. And as I mentioned before, consumers expect to be able to interact with their bank and insurance company, the telco provider, just as they interact at home. I think the differentiator for us, and there'll be a lot of talk on this particular topic, is that we're focused. We're focused in the contact centre or customer service area. We focus in particular technologies, industry sectors, retail banking being one of those sectors. And we've been in production for over 4 years. So it brings domain-specific knowledge. We're quite unique in that not only do we bring that domain knowledge through the implementations we've done, and if you think about it, it's AI, it's machine learning, the virtual assistant, the conversational platform learns.
Can you learn, what about accents? I mean,
accents is really interesting, and we've got examples or implementations where it's not just accents, but it's mixed language model. And what I mean by mixed language is it's not somewhat a customer speaks either English or French. They switch between languages during conversations, and it's only just now that the technology has been able to start to deal with that. We've had implementations, for example, in the Ukraine, where people switch between credit card numbers. They read the first 4 digits in Ukrainian, second four in Russian. So our success is based on the focus on the domain, the contact center environment, specifically in industry sectors, and then ultimately, based on the experience, being able to build a language, and not a spoken French, German, Spanish language, a language which is specific to our particular customer. You know.
And if the artificial intelligence doesn't understand what the person's saying, presumably there's a default way, you just press a button and it. But can you eventually talk to a human?
Yeah. You have to teach it. You know, there's this misconception, and I've just spent some time at a conference in Barcelona, which was AI related, and there is a general misconception in the market that, you know, and vendors don't help this. They go and tell people that you can plug in and it just starts. You know, you need to feed that. There's a manual input. You need to feed it data, and the more relevant data that you can feed it, the better. Right? It requires some effort. But you know, just like a human being, you teach it. So if it's wrong, you correct it.
Right.
So
Okay. Alex, could you give us an example, a real life example of how one of your APIs is being used by a bank to integrate its systems with its SME customers?
Sure. So in a typical small business banking relationship, the small business is being asked for things by the bank and asks for things back from the bank. And what it typically is asking for is data, which it then inputs into its own internal software. So put it in really simple terms, a widgets manufacturer near Leicester is looking for a £100,000 loan, and it moves to a new bank in order to do that. The bank will ask them for a whole bunch of information to get them onboarded as a customer, and they'll say, right, can you send over management accounts and a history of your bank statements? And they, at the moment, the way it currently works, outside of an integrated model is they will go into their own accounting software, download a whole load of that data, put them into an Excel or a PDF, and send them over manually to the bank. The bank manually then inputs those into a credit model. Credit model spits out the price for a loan, whether to accept them as a customer, give them an account, whatever it is. And then after that, the small business will go back into it, go back to the bank and look for those bank statements and manually upload those to the accounting software. So what Codat does is effectively just automate that piece in the middle. So rather than that happening every time, it's a one-time authorization that the small business gives to the bank to say, prepare for the bank to access my data, both to pull data, to make decisions about me, and to give data back to me that I'd be asking for.
Would your target clients, the banks, would they be fairly small banks that don't have the in-house expertise or the budget to use a big tech company?
No.
Or do you have big clients?
Yeah, so we're working with some of the tier one banks here in the UK, and we're working with large banks in the US now as well. And at the core of it, we're a developer tool. So the core piece of this problem that we're solving is actually that the small business might have any one of 15, say, different accounting packages. And the bank, rather than building an integration with each one of those directly, builds one integration with Codat, and we deal with that technical work on the back end for them. And that's a problem that's faced by all the large players as well as the small ones.
Okay, thank you. And John, a specific question for what you're doing. I know that you're working with a bank in the UK to develop a solution that's going to allow eventually banks to track updates to regulations in the FCA's handbook. And the solution's been tested in the regulatory sandbox at the FCA. So how did you get involved so closely with this major bank and the FCA?
Okay,
and when you develop what you're developing, when is it going to become widely available?
Okay, so there's a couple of parts to this project. As a lot of people are aware, in 2017 we actually went live with a new digital handbook for the FCA, where we developed the underlying taxonomy.
Oh, so you developed that?
So we actually developed that. So we actually developed the entire taxonomy for all parts of the handbook. It's about 4,000 attributes in that. And it's one of the most advanced projects. It is the most advanced project of its type in the world, and a number of the other regulators are looking at it. And subsequent to that project, we're now working with a US regulator to do exactly the same thing, where in the era of artificial intelligence, the first prerequisite for intelligent regtech is actually going to be some intelligent regulations and some intelligent handbooks. So we would have developed that. Furthering on from that, a bank has engaged with the FCA in which cannot be named, in the sandbox. And if you look at the problem we solved for this bank and now multiple other banks, because we've done this now a good few times, is where the banks ingest all of the regulations electronically. The problem that the banks have, just this particular bank, may have had up to 1,200 people in different locations around the world digesting those regulations, which come in electronically, putting them into an Excel sheet and making them relevant for different business units. So right now, even when regulations are delivered electronically, there's an awful lot of manual processing that goes on in Excel on them. What we've actually done is we're trying to make this a straight-through process so the banks can actually digest all of these regulations and send them to the right place, and then where they can have some semantic meaning. And just exactly as you were saying, we would use a lot of the trick in terms of what we're doing with text analytics is we train the models. So a lot of people don't realize is that NLP or text analytics out of the box is only 60% accurate, and really you need analysts to actually tune those for particular types of regulations. You need to tune your artificial intelligence to get the accuracy rates up very high, but the net effect of this is that regulations come in electronically. They're now served up to different parts of the bank. There was one part of the bank that trialed this, and there's two advantages. One is they get a timeliness advantage, the second is there's not as many people handling it. But the huge benefit that the banks are finding is that it's now auditable. So it's now possible for them to do what we would call regulatory assurance. So in other words, the regulator comes into a financial services company and says, prove to me that the right person has actually seen what's happened here. Prove to me you've done something about it. Prove to me that you put a process in place about it. I'd have to say that if you look at this trial, it hasn't just been about us. There's been some other firms have been involved in it. And what we're really trying to do is automate end-to-end the life cycle, give better, first of all, make the institution aware of the regulations, make sure the regulations are actually complied with. And then the last part of it is, if that all happens, that should result in reduced risk on the regulatory side for the institution. It should result in better outcomes for consumers and for market participants. And the regulators, and I just think they're very, very open to technology, but regulators want good outcomes. That's what they're in the business of. They only find people when those outcomes are put at risk.
Yeah. Okay. Thank you, John. Well, we've discussed the opportunities generically and specifically to each of your organisations that fintech offers. Let's move on to some of the negatives, because there are some. We're going to look at what the barriers are, the obstacles to innovative technology. So let's start with, shall we?
Yeah, sure.
Gareth, I'm thinking of things like customer resistance to new ideas, regulatory resistance, costs, and the fact that new technology doesn't always deliver on the promise, and it can even go spectacularly wrong. So, speaking generally, rather than your own company.
I was going to say, I'll speak generically first about emerging technologies, AI, blockchain, virtual assistants. I mean, if I get a little bit more time, I'll talk about customer service, where we specialise. But generally, I think adoption and education is an issue. I think customers struggle to know where to start, particularly when implementing emerging technology. My advice to organisation would be to focus on one area and essentially start now. The first 1 or 5 projects or proof of concepts should be about current business challenges or problems. They can be very simple, but solve those challenges. The theme of this webinar is transformation. As you add additional projects and POCs, then the collective starts to become a transformation. Some additional tips or things which are very simple in their nature, but I think a good advice, and customers ask, make sure that your projects have measurable KPIs. If you're working with emerging technology, then create a centre of excellence. It doesn't need to be huge, just have some expertise. If you don't have the expertise, lean on the expertise of specialist partners, not just one, a collective of partners. Make security, which is a big issue within financial services, the responsibility of everyone. Everyone thinks about security. But essentially, my advice is get started now. And based on this kind of iterative approach, you can change things. You can make a mistake. Right?
Okay, well, we can come back to you later and find out what specific barriers you encountered and how you overcame them. But I'd like to go to Garrett Cassidy of Trezeo. And can you tell us, in your view, what the main obstacles are and how you can get around them?
I mean, and one of the probably two key things. One, I'm going to slightly disagree with Alex earlier, saying that financial products don't change. I think one of the barriers is our own mindset, and the mindset is somewhat influenced by regulation, but our own mindset in financial services is, and for a long time has been silo-driven, very, very product-driven, not necessarily customer-driven. So we, traditionally financial services thought about products, thought about overdrafts, mortgages, current account, loan, income protection insurance. It doesn't think about what actually is the set of services the customer needs. And one of the barriers, therefore, is it's very hard, and the regulation is built that way as well in a lot of cases. So it can be quite challenging to take that customer view across what is multiple products. So our own product is effectively leveraging 4 different kind of components of financial services in slightly different ways. One part of it is a bit like an overdraft, but you've got, and I think that's a big challenge, you've got to take a customer view. and you've got to try and not, in the first instance, let yourself be too influenced by those traditional barriers of how regulation or how the traditional industry looks at things. And then if you've solved that customer problem, then yes, you've got a challenge to how do you align within the regulations, and that is challenging. But I think it's a better way to go at it, to try and come up with genuine customer-focused solutions. The other one, which is coming out from a very different place, is that I think picking up the kind of customer adoption piece is, I think, financial education is important for a lot of this. How do we engage customers so they can understand what are the right things? I think those two kind of go hand in hand. But I think that's a really important.
Financial education, would that mean getting involved the trade associations or professional institutes and so on?
I think it's more if it's so running the consumers. So how do we continue to help increase the kind of financial knowledge of consumers, around all sorts of things, whether that be pension provision, that would be savings. Like, there's a lot of activities going on, but then it's marrying the activities with the services that are coming along to try and help with, to help that kind of adoption piece.
Yeah. Okay. John, what in your view are the big barriers to the development and the implementation of financial technology?
Well, I think a lot of people have said it, but I think it's really, people talk about legacy systems. I actually think it's about legacy thinking. I think it's about the thinking within the banks. So, I must say I totally agree with you in that. If you look at products and services, and basically they all came from paper-based systems 200 years ago. So financial products are 200 years old. They're only like that because they existed when ledgers were actually books that were there. All of those things are possible. I think the second thing is technology doesn't fail, people fail. So if you look at innovation, a lot of financial services companies cannot attempt to run IT projects the way they built their legacy systems. So if you look at innovation, I think the key thing is, and I think it's everything you said already, it's you have to start somewhere, you have to start small, and then you have to see how you have to test that. And I think one of the things you've got to do with technology is the technology can disrupt a lot of value chains. The technology can actually disrupt a lot of products. Or another way of looking at it is the technology can create really, really useful products. I'll give you an example. I have a 20-year-old and a 14-year-old son. They both do their banking online using a particular online provider, and they're using products that I've never seen before in terms of their generation. They will never go into a bank branch ever in their lives. So you have to look at how technology is adopted in every other facet of life, and just say that we build legacy systems effectively in the financial services industry around manual books or ledgers. Basically, we got paper-based systems. We implemented paper-based systems using the mainframe. That's where the technology comes from, banking. Basically, because of mobile computing, mainly, there's a fundamental transformation in terms of what's happening, and there is a different way of actually doing these IT projects and going about these transformation projects than the way the existing mainframe technologies have been built. And if people are trying to adopt or go through conventional IT with some of these new technologies that have been designed to deliver totally different benefits, and they're being done by the waterfall method, or by the method of actually what gave us all the legacy systems in the first place, then obviously they're not going to succeed.
Yeah. Well put. Alex?
So, yeah, I think the points around legacy thinking are absolutely true. Very much internally within financial services organizations, but also on the consumer side. And a lot of that, I believe, is sort of stems from the way in which financial services organizations actually treat their customers and have done historically. And the main gap there is really just about transparency. In finance, this has always been a particularly difficult problem, because the way in which you made money was by making your product more complex and charging additional fees for it. There's a real move towards keeping fees really simple and rewarding customers staying around for longer, not giving them upfront discounts and then charging them on the back end as they last for longer. But it applies in lots of different areas within financial services. I particularly remember the early days of Monzo, when they came out and they had a security issue, and they detailed in great detail what precisely that security issue was. And I as a consumer, loved that brand and that product far more for simply explaining what the nature of that security issue was, as opposed to the sort of historical model of how you deal with that, which is effectively to say, bear with us, we'll recover it at some point, and we won't tell you precisely what happened. And I think that shift will allow consumers to become more trusting of financial services, and that just means that the financial services themselves will be able, emboldened to take on more exciting technological projects.
Now, I can see why banks would want to use fintech companies, because like your company, Codat, there's a very specific USP that you have, and banking using you wouldn't be taking that many risks. But from a consumer's point of view, using an untried and untested financial services provider, and Garrett, I'm building up to a question for you. Why would a consumer feel safe putting their money with you, where instead of, say, with Lloyds or Barclays or Bank of Ireland, API rather? Because maybe if they just see you've got an internet presence, how do they know that you're there's genuine articles?
So this is a core challenge that any direct-to-consumer fintech has to address, and it's about building trust, and that happens in a number of ways. One, clearly, the regulation piece is part of that. So you see a lot of you see two schools here of fintechs who are avoiding. Most fintechs who are servicing direct know they need to have that regulatory stamp, because that's a trust piece. Some of it also is about simple things like having a phone number, being clear you have an address, that you are real, putting photos on a website of real people. And then it's also just about building, in a lot of cases, you just have to work with your early customers and prove that. The other angle then is innovative partnerships. That could be partnering with banks when you're servicing underserved sectors, but it can also be partnering with other actors in the ecosystem who have some recognition / trust of the customers. That's obviously another way of going about it. But it is a challenge, and that is one of the key challenges to scaling, and it is one of obviously the reasons why many fintechs do move to partner with banks. And there's nothing wrong with that, because in a lot of cases the fintechs are doing something better than the bank can do for all sorts of reasons, whether it be operating cost reasons, whether it be CX, customer experience, that kind of stuff, and therefore are good add-ons to the banks.
And the fact that you're FCA authorised is, I know it's a regulation you have to comply with, but it's actually a good selling point, isn't it? It's on your website.
Yeah, so it's a key piece of building trust, and then building trust around security, that people's data is security. And another one that we see as very important is building trust around data. That actually this isn't, data, and it's a double-edged sword in this space. Is data is obviously a source of huge amounts of value to be able to service the customers. We need to be very clear with the customers what the data you're taking, what data you're using, why you're using it, and the other one you need to avoid is, and this obviously coming back to almost some of the potential negatives, is that in using data and using models you don't end up with unexpected biases. That potentially humans may or may not have had, but your models don't end up creating unexpected biases, like the completely different sector where Amazon have stopped using AI-based recruitment because they found it was biasing. Because it was using the history of their employment record as a go forward, and therefore it was biasing from a balance and kind of inclusivity point of view.
Gareth, you started off on the negatives by talking generally, but I wonder if you could share with us without, this isn't an encounter group where you have to give us your sob stories, but could you perhaps tell us what particular difficulties, some of the difficulties you might have had in getting your
I think some of the,
yeah,
I was going to talk about customer services specifically. I think the other guys have touched on this. We talked about legacy systems. There's the general limitations of legacy systems. If you apply that to customer services, then what you actually find are people or organisations develop solutions or for specific customer channels. And what actually happens then is that if you get channels that are not connected, and we actually call that, and when you get channels that aren't connected, there's no seamless customer experience, there's no end-to-end customer journeys, and you actually get something that we phrase a digital gap. So basically you're getting inconsistent experiences across your channels and very frustrated customers, right? And that's basically because people are implementing solutions specifically for certain customer channels. We take more of a holistic view. And in order to try and bridge that gap, we would promote the use of AI, and so embedding AI in the specific channels, in addition to automating as much back-end process as you can. And ultimately, the result of that is an integrated set of customer channels, ones that you can add to, right? And some seamless customer experience, and also a single source of data, or a single view of the customer of the organisation. So those are some of the challenges, and it all sounds very simple. Overcoming that can be quite complex and difficult, but that's what we're trying to help and educate our customers on.
Okay. Now, John, at the outset, I asked you about RED, the Regulatory Event Data app that you've got. Sounds wonderful, but what sort of teething problems did you have in developing that, and how did you get around them? You must have had, there would have been some difficulties, not necessarily problems, but
well, absolutely.
challenges.
But just I think two things. One is, so first of all, nobody of my generation built that app. It's the team that did it are people that have grown up with devices, and while it sounds funny in the beginning, for example, in my house, I can fix any computer in the house, okay? But if something goes wrong with a device, my 14-year-old has to be there to actually fix it. So if you look at apps, it's a completely different platform. Simplicity, and we used to talk about user interface, and it became user experience, and today it's a customer experience. The customer experience is what you actually get from apps. It's going to the next level. So two things. You have to cut down or simplify everything that you've got on a screen, so you can't show too much information, because it's a much smaller screen than on a computer. And then secondly, we would have done a soft launch, so we actually got 200 users to actually use the app before it went live. So we tested absolutely everything, because one of the challenges we find with apps is there's so many apps out there, people are very unforgiving. They'll try out your app, they'll download it, any one hitch they have it all, anywhere in the usability of getting that app to work for them, and they're off somewhere else. So it's actually the reliability of it. So really what I'd say is, and I think this is really the new paradigm in the digital world, simplicity is everything, and reliability is everything as well. So make your application as simple as possible, simple to use, and then simplicity and reliability kind of go together.
Right. Now, most apps are aimed at consumers. I don't know how many business apps are out there, but it's unusual, isn't it, for an app to be developed for a business?
Absolutely. So just to tell you, if you look at what we were trying to do, is we're saying, look, we have highly value-added information, but flat information is free. So what we're doing is very disruptive. This is a free app. We're giving this away, where there's a lot of information providers that are charging a lot of money for this. But the information providers that provide this information don't make it available on a PC. You have to have a terminal, would you believe, to have it. So we're competing with somebody who has a terminal, and it's happening already. Really, what we're finding is that this app is global. So when you start in the morning, you can see everything that Australia and Asia has done, and then While you're leaving the office, you can start looking at what's happened in the US. So it gives you complete real time.
Is it just factual, or is there any analysis or opinion, viewpoint?
There is. Well, this is on the next great thing about an app, because it's digital. You can see what people like and people don't like. So there is a pull for analysis. The question mark always with people that have absolute free models is exactly what do we give away for free and what do we charge for. So this is where we're at on it.
Yeah. Okay, we don't have that much time left, but I'd like to ask Alex about any particular problems you might have had with developing, getting Codat started, the company itself, and then developing APIs for your clients. There must be problems along the way, and what are they typically?
Yeah, so we are effectively a developer tool, an open data platform, and with that you kind of leave the exact application and use case up to the end customer. So we've had people come to us and you know, so this happened a lot more as we were getting started, and they said, that sounds brilliant, I can get access to all my customers' accounting data. So I just kind of let them know, and then I get full access to everything, and I can just make ad hoc credit decisions based on that data, flexing limits according to exactly what I like. Not only is that not GDPR compliant in any way, it's also it's a difficult thing to row back from, because actually it is theoretically possible to do precisely that, to look at someone's data stream, and changing the way in which people think about this particular problem, that you need to treat the customer as a partner, and get them to share their data with you in return for something valuable that you're providing them. Has been a difficult thing for us in terms of getting it in place. I mean, other than that, the real problem that we all face, and I think it's a pretty consistent one, is getting our way into the development roadmaps of large institutions. But that's an inevitable one.
Yeah. Well, we're just about finished, but we do have some questions coming in. Let me just have a look at the screen here. Okay. This is from Tony from Dublin. What advice would you give to new fintechs and startups working with large banks today? Any advice on how to cut through the red tape and barriers and get a sale? Right. Well, there are, I think, all three of people in particular stick in my mind who would be good at answering this. Gareth?
Yeah, that's the magic question. I wish we could all answer that. I think there's a number of things really. It's hard to put this into perspective because I don't know the product or the service. But certainly in our experience, or given what we're selling, then we need to get in at quite a high level. We've got to try and align with the strategic objectives of the bank or the financial organisation that we're selling to. So we've got to ascertain whether we can fit into that strategic objective over the next 2 to 3 years. Interesting enough, it's kind of refreshing to hear from recent research that organisations are actually making decisions that are separate to their strategic objective, and there is some research to suggest that firms are making ad hoc decisions based on emerging technology offering. So it's trying to get in at a high level. More interesting, it's actually understanding your influences within the bank, and we've done quite a lot of work with the innovation departments within the banks. They have the same challenges as us, as the fintechs and the providers, and it's really trying to understand. I spent 2 weeks actually, started this year, with innovation departments from banks in a collaborative kind of accelerator program, if you like. And actually, it's just refreshing to hear that they haven't got the same frustrations, right?
Thank you. We've got another question coming in, but I'd also like to put that same question that Tony asked from Dublin to Alex. How do you get the sales? How do you convince a bank to use your service? Because this is monetizing your brilliant technology, isn't it?
Yeah, I mean, the one thing that we've seen, and we don't have a long history of selling into large financial organisations. We've only been doing this for 2 years, and it's pretty much the same as what people tell you for any enterprise software sales. Large organisations have a lot of people in them, so if your product's good, there'll be someone in there who really cares about what you're particularly trying to do. So find that guy, make them really care about what you're doing, and they'll go off and sell it internally for you.
Michael, I would just have one quick point, and that is, Tony, it kind of depends where you are in the cycle. But if you're trying to get one of your first couple of clients, you've got to really decide pretty quickly which bank you're going to give your time to. So every startup has got about 18 months to get their seed client, which is the client that's actually, or their first, second or third client, which are going to be the clients that will carry them through to the next phase of business. If they don't get that within the first 18 months, it's all over. So choose the bank carefully. So if you go into a bank and you hear, I'm Joe, I'm from procurement, I'm here to help, you need to find another bank.
So Alex's point was fantastic. Find the sponsor within the organisation that works.
Well, look, I'd like Garrett to answer that question as well, but there's a bonus question for you that's just come in.
I take the, the bonus one, yeah.
You want to take the bonus question?
Well, whichever you want me to take.
Well, how you find the right person in the bank to sell to, and then the bonus question.
This is almost from being the other side of working in large organisations, but I think, but it's the same thing as consumer. So yeah, find the right person. But you need to be fixing a problem people care about. And the same goes for enterprises as goes for consumers. You need to find a person who cares about the problem you're fixing about, who will actually then sell it internally. And there are lots of people you got to sell to, not just one. So you got to recognise that.
Okay. And then the bonus question, which is very, very brief, is it's come from Philip in London, which is about trust. It's a long question, but essentially he's asking, how do you convince customers to trust you as a bank or as a payments or a banking service provider?
We've covered some of that in the previous question. I'm just taking a few other bits out of the question around sharing data and does tech come first. I think it goes back to you got to be solving a problem for the customer first that they care about, particularly in the early stages, that they will make that leap of faith. So that's one thing we've certainly found when customers who really get what we're doing and it means something to them, it's much easier for them to make the leap of faith. But and there's come about tech. Customers don't care. We're not selling technology, or customers don't care about tech. They care about a solution. So tech should always be in these kind of things in the background. So it's about selling what you're trying to do, what benefits you're trying to sell. And yes, of course, you got to build trust. I wouldn't go as far as So this whole thing about just rebuilding trust in the whole banking sector, you can only do that one step at a time. You do that by doing what you say you're going to do and being consistent, and that takes time.
Okay, thank you. We've got 2 minutes left. Final question for each of you to answer. It's the same question for all of you, starting with Alex. You've got about 10 or 15 seconds each to answer it. We've talked a lot about disruptive technology. Alex, what in your mind is going to be or is already the most disruptive technology of all in financial services?
Yeah, so Paul Volcker in about 2000 said that the most important financial innovation of the 20th century was the ATM. And I actually completely agree with that, in that what really matters is the point at which you deliver things to people. So the closer we bring things to the consumer, the better.
Okay, and Garrett?
I think when we've talked about a bit in terms of using the volume of data we now have responsibly, responsibly being a very important word, to actually service these customers. I think that's the transformation from the silos of data and using the machine learning and AI and other things to actually help really deliver that stuff to the point where the customer is.
Okay, thank you. And Gareth?
I think it's actually a combination. There's no one specific technology. If I had a crystal ball, but there's a lot of exciting technology driven by artificial intelligence, automated analytics, machine learning, etc. It will be a combination of these that drive change, successful change. What will be the most successful really is going to depend on it solving the problems or challenges we've discussed today.
Okay, thank you. And finally, John.
Okay, well, I think it's all been said already, but very quickly, I'd actually say that if you look at intelligent contracts and, for example, forms like intelligent regulations, and the reason I say that is I think a lot of intelligent contracts may actually eliminate the need for financial services from transactions altogether.
Intelligent contracts being smart contracts, also known as smart contracts. Okay, thank you very much. Thanks everybody. That's all we have time for. This has been a live broadcast, but it's been recorded and will be uploaded to the Ditto website. It should be available, will be available from tomorrow for you to listen to again if you wish, or to share with your colleagues. Our next spotlight will be next year. It's going to be in January. It's on wellness, mindfulness, and career development. If you haven't already received a notification about this, you should receive one soon. And if not, just go to the Ditto website and there's a tab at the top. I think it's at the top, it might be at the side. Spotlight tab. Click on that and you'll find the details when they're ready. That's it. All that remains for me to do is to thank our listeners for listening and to thank our four panelists for taking part. Thank you to Alex, Cardona, Garrett Cassidy, Gareth Mee, and John Byrne. Thank you very much.
Thank you.
Thank you.